In 2025, cryptocurrencies are increasingly perceived not as a hype-driven fad, but as a fully fledged financial instrument. But how do they respond to real events in the global economy and politics, especially when Donald Trump is back on the world stage? You're watching the Blockoria channel, where we make the complex understandable with analogies and examples. We appreciate your time. Subscribe so you don't miss out on new helpful videos. With Trump's rise to power, a new phase of geopolitical pressure began. Trade tariffs, escalating tensions with China, sanctions conflicts. All of this has had an impact on the cryptocurrency market. But how exactly does this affect Bitcoin, Ethereum, and other digital assets? Let's take a closer look. Cryptocurrency and the global economy. How are they connected? To understand why cryptocurrencies react to political events, you need to understand how financial markets work. When the world is stable, investors prefer reliable assets, bonds, shares of large companies, bank deposits. But as soon as turbulence begins, attention shifts to so-called safe haven assets. An example? Gold. During economic crises, gold rises in price. Why? Because it is a proven hedge against inflation, devaluation, and instability. What about Bitcoin? Bitcoin is increasingly perceived as digital gold. It is not subject to inflation, has a limited supply, and does not depend on central bank decisions. Therefore, when risks appear on the world stage, crypto, like gold, experiences a surge of interest. But there is a caveat. Unlike gold, cryptocurrencies are much more volatile. This means that they react more quickly to both positive and negative developments. What is Trump doing? And what does crypto have to do with it? In early 2025, President Trump announced a new wave of import duties on products from China, Mexico, and EU countries. The goal is to bring manufacturing back to America and reduce the trade deficit. From an economic point of view, this sounds logical, but in practice, it raises prices for goods, increases inflation, and causes instability in the stock markets. The market's reaction? U.S. indices such as the NASDAQ and S&P 500 reacted with a fall. The dollar began to fluctuate. Investors began to look for safe havens. Gold rose by 8% in 3 weeks. Analogy: cryptocurrency as a boat in a storm. Imagine that the global economy is an ocean. When a storm is on the horizon, strong winds, turbulence, instability, large ships, stocks, bonds, fiat currencies begin to sink. Cryptocurrencies are flexible, fast boats. They may be less stable, but they can carry you away from the center of the storm. That's why crypto often shows growth in times of crisis. Historical crypto market crashes and why they happened 2018. The crash after the 2017 bubble. Mass hysteria, scam projects, lack of regulation. March 2020, the COVID-19 pandemic. Panic in all markets, including crypto. 2022, the collapse of the Terra ecosystem and the crash of the FTX exchange. Loss of trust in DeFi and centralized platforms. 2025, current geopolitical pressures, tariffs, sanctions, global mistrust. How the trade war is already affecting the crypto market, growing interest in decentralized assets. Against the backdrop of trade restrictions and growing distrust of traditional institutions, investors are beginning to diversify their portfolios, including through cryptocurrencies. Increased turnover on DEX exchanges. People are leaving centralized platforms for fear of blockages and sanctions. Decentralized exchanges are becoming a new safe haven. Growth of stablecoins pegged to alternative currencies. Amid pressure on the dollar, some investors are switching to stablecoins pegged to the euro, yen, or even gold. Intensified discussion about sovereign crypto reserves. As we discussed earlier, governments are beginning to seriously consider Bitcoin as an asset that can protect against inflation and sanctions pressure. Market disappointment. Instead of an alt season, a decline. Many analysts expected that after the Bitcoin halving in 2024 to 2025, a so-called alt season would begin, with growth in most altcoins. However, in reality, the market is showing the opposite trend. Pressure from the trade war, global market instability, and declining investor interest have led to a decline even in large projects. Nowadays, the term crypto winter is increasingly being used to describe a period when cryptocurrency prices remain low for a long time and activity declines. And while for some this is a signal to run, for others it is a window of opportunity. In the next video, we will explain in more detail what crypto winter is, why it starts, and how you can make money even in such conditions. Subscribe so you don't miss out. Geopolitics and crypto, the digital race between superpowers. While the U.S. is embroiled in a trade war and Europe is facing internal economic pressure, other players are not sitting idly by. The geopolitical map is changing rapidly, and cryptocurrencies are at the center of these changes. China is actively developing its own digital currency, the digital yuan. It is already being tested in dozens of cities and is used for domestic and international payments. China has not only restricted the use of Bitcoin, but also aims to offer its own digital alternative for international trade. This is an attempt to challenge the dollar on the global stage. The BRICS bloc, consisting of Brazil, Russia, India, China, and South Africa, is discussing the creation of a common digital currency independent of the West. The goal is simple: to reduce dependence on the dollar and SWIFT and create their own financial infrastructure. In this context, Bitcoin and Ethereum are becoming not just investment assets, but neutral instruments between economic blocs. The European Union is promoting the digital euro, and projects to introduce cryptocurrencies into national payment systems are gaining popularity in Latin America. El Salvador and Argentina are just the beginning. What does this mean for the market? Cryptocurrencies are becoming part of the global technological and economic race. Those who previously ignored them now see them not as a threat, but as a strategic advantage. If the trade war gains momentum and the global economy slows down, cryptocurrencies could experience a new wave of growth. This is what happened to gold after the gold standard was abolished in the 1970s. Here is a parallel. Back then, gold became a guarantor in a world of unstable currencies. Now Bitcoin is becoming a similar guarantor in a world of unstable geopolitics. Conclusion: the crypto market is not a toy for geeks isolated from the world. It is directly dependent on politics, economics, and global decisions. Trump's trade war is already affecting the market. The price of Bitcoin is feeling the tension between the superpowers and reacting to tariffs, sanctions, and the dollar exchange rate. But most importantly, crypto offers a choice. The choice to be independent from central bank decisions, politicians, and inflation. Only time will tell if Bitcoin will be the new digital gold in 2025. In the meantime, let's follow the news, analyze the market, and remember, financial literacy is the best asset in unstable times. Do you think the trade war could strengthen Bitcoin and undermine confidence in the traditional financial system? Write your thoughts in the comments. Let's discuss. Thank you for watching Blockoria. Our goal is to make the world of cryptocurrencies easier to understand in order to accelerate its development. With your support, we will be able to create new high-quality videos, making crypto education accessible to everyone. If you like our project, support us by donating. It's an investment in your knowledge, and the world of the future will be better. We're happy to share our partners' referral links with you. By using these links, you may receive bonuses, prizes, and commission discounts.